Happy Friday, everybody. This is Joe Cusick, VP of Wealth and Asset Management at Trading Block and MoneyBlock.com with your traders exclusive for this Friday. Well, the price movement yesterday, Thursday, was impressive, and it continued today with the S&Ps right off the best levels, breaking that 1900 level, with the Bank of Japan further stimulating the global markets. And you know what? When you look at this, nearly every market was up this morning. What I don't like is the fact that you look at certain ratios, like the transports, they've been underperforming the utilities. The Russell, that's been underperforming the general market, the S&Ps. And the discretionary names have been leading the way down versus staples. When you see those markets that are usually aggressive sectors that you want to see a lot of participation in by traders and investors alike, if you see that they're not leading the market to the upside, any upside move is going to be suspect. Now, this does seem like it's reasonable action, but that action that I saw with those ratios I was discussing screams risk off. You're not seeing players going into these risk names. The S&Ps have been churning basically between that 1850 and 1900 level for the last week. And as a matter of fact, you're looking at that longer term support, which is the November of 2014 and the August 2015 lows. You still see that rotation into the defensive names, and it continues in a major way. This is telling me that there is not that conviction. Also, volatility, staying above that 20 level. That's another one. The biggest one, as I look over to my left in the S&P interest rate pits, is that the 10-year note yields continue to drop. That's not a lot of conviction. With the yields right around that under 2% level, or around 1.98%, this is telling me that any rally is going to be met with some suspect. I'm going to potentially look out there for ideas that are going to take advantage of market volatility. So in other words, in this earnings environment, I'm going to look for escalated implied volatility in names that are going to have binary events, and I'm going to be looking at March options, and I'm going to be looking for out-of-the-money credit strategies that are going to take advantage of, once those binary events occur, the collapse of that volatility. And so you're going to be looking at selling anywhere between 30 and 20 delta call or put credit spreads, or a combination of the both. That's what we're going to be looking at over the course of the next couple of weeks, and taking advantage of the volatility. Now, what you have to be careful of is if the market starts to pull back dramatically. It has that potential. And really, what's going to be a key indicator if, in fact, this market is not going to be able to challenge, as I had noted last week, that 20-day estimated moving average, which seems to be over all the major complexes, the S&Ps, the NASDAQ, as well as the Russell. If it is not able to get through that 20-day estimated moving averages on those general market the market indices, you're going to see that the market's going to have some pressure. Specifically, if the catalyst that's going to get them over that is going to be energy. It's been beat up. It continues to be beat up, rightfully so, with the uncertainty globally going on economically. So we're going to keep an eye on that. If, in fact, energy cannot catch a bid bigger than where it is now, crude right now challenging that $33, almost $34 level that really only had about a 25 to 30% probability of being there by Feb expiration. If it can't get up above those levels and get a bid, this market's going to continue to be suspect. So with that being said, I want to wish everybody a great weekend. We'll see you next week. This is Joe Cusick, VP of Wealth and Asset Management from Trading Block and MoneyBlock.com, wishing you a great rest of the trading day, great weekend, and we'll talk to you next week.